Aloha and welcome to Ehana Kako. We're a weekly program on the Think Tech Hawaii Broadcast Network. I'm Keli Akina, president of Grassroot Institute, and we welcome you here. We know that our audience is across the world. Some of us are here in Hawaii, in the Pioneer Plaza, in fact, right here, a place where royalty have walked and dined and entertained themselves. In addition to that, we care a lot about visitors, so we hope you'll visit us, whether you're halfway across the world or in the United States, on the mainland. The issues of Hawaii are important, not only for those of us who live here, but in terms of global development. Today we're going to talk about tax policy and an organization that's doing a tremendous amount of work in helping to inform the public and inform policymakers. That's the Tax Foundation of Hawaii. The Tax Foundation of Hawaii recently experienced the loss of its executive director, Lowell Kalapa, who has been recognized and honored by many people in the community for his work. We're glad today to have the current interim executive director with us today, Tom Yamachika, and I'd like to welcome him to Ehana Kako. Tom, welcome.
Hi, thank you very much for having me.
Well, it's great to have you here. You know, somebody said to me, I have too many attorneys on the program. But that's basically your background, isn't it?
Yeah, I'm another one. My background is in tax law. I practiced with a local law firm for a while and then went to the tax office.
Right.
And then after that went to public accounting, so I kind of went into all three flavors.
Well, you know, I think that's good too, because, you know, your organization has a certain kind of expertise and it would need to have somebody who's got tax law background as well as some experience with the state. Now, I also understand you have been on the board of directors of the Tax Foundation of Hawaii.
Yeah, I was on the board for maybe 2-3 years prior. To this past December when we had our very sudden loss of Lowell Kalapa.
Yes,
our president, who, as you said, was one of the most respected figures in tax policy.
Absolutely. In fact, you know, on behalf of the Grassroot Institute and the Think Tech Hawaii Broadcast Network, we want to express our condolences. Lowell was a great treasure here in the islands. In fact, let me ask you a bit about that. You know that here in Hawaii, we don't necessarily have a balanced political party system. And Lowell often took positions that were not in keeping with the majority, although he was very faithful to very fair and equitable principles. And yet, and this became all the more evident in statements about him after his passing away, he became a very respected man. His voice was really very well respected by people on both sides of the party lines and nonpartisans as well. How do you account for that, especially dealing with such controversial material at times, or critical material?
Well, Lowell, by his background, was a journalist, and he immersed himself over a number of years in the history of what happened in the Hawaii tax system. So he kind of knew pretty much the ins and outs of when things were enacted, what kind of history it went through, the gyrations it went through, and could speak with some authority about that. So I had mentioned that he was well respected. I think the reason why that was so was because he really couldn't be bought. He had he had an organization, and as a representative of it, he was true to the principles that the organization stood for. And even though some of our members or some of our constituents or supporters, whatever, even though they didn't like that, the principles were there, and he stood for those principles.
Well, the Tax Foundation of Hawaii is independent, isn't it? It doesn't receive any kind of substantial or regular funding from government at all. It's independent. It's a 501c3 nonprofit.
Yes, it's a 501c3. Presently, we get not one dime of government funding.
Is that by design?
That is by design.
So you can actually stand with independence as a critical voice.
That's right. So we have various types of members, some businesses, some individuals, but we have no government money.
And you have a variety of individuals supporting you. What was interesting is, as I looked at your list of supporters on your website, or members, it was interesting to see that you had members who take different positions politically from each other. So really, it's not a political organization. It exists to perform a fundamental authoritative service.
Yeah, that's true. There are a lot of bills that not too many people are interested in, frankly, because it's kind of arcane.
You mean bills that go to the legislature each year?
That's right. Bills are kind of the building blocks of law.
Sure.
They start as a bill, they go through the legislative process, and if they survive all the way to the end, then that's when they become law. The bills that I'm talking about are, not terribly popular in terms of you wouldn't pick up one as lunch reading,
Sure.
any day, because some of them are very arcane, very complicated.
Well, frankly, Tom, we'd need a tax attorney to understand them, and that's where you come in your organization.
Yeah, but the thing is, because the subject matter is a little bit complicated, oftentimes the only people who would speak on the matter were from the Department of Taxation, namely the government, and they have their own interest, and there really wasn't anybody else. That's where Lowell and the Tax Foundation kind of provided a counterpoint to the tax department, because oftentimes there'd be only those two testifying
Sure.
on a particular bill of the legislature.
Yeah, and frequently that kind of legislation is motivated by administration. Administration has a task to carry out governance. It requires money, and one of the streams of revenue is taxation. So many of the bills that appear before legislative committees are generated by that, and the tax department comes in order to promote them, which is a very different function from analyzing them in an objective sense. And maybe that's where you can tell me a little bit about the role that Tax Foundation plays. Am I correct in understanding it helps us to understand really what a bill is about, what a tax policy, a proposed measure is about, and
and
whether
let me give you
yes.
for example. A few years ago, the state was in a kind of a fiscal crisis. I'm talking about 2010, and the state wanted to try to resolve their problems through revenue enhancement.
Yes.
So they came in with some very draconian penalty measures, including one that ultimately became the GET Protection Act, or Act 155, which we can talk about a little bit more later.
Sure.
But you kind of look at the bill by itself. It sounds pretty arcane. But then when you get down to the nuts and bolts of it, it's really pretty onerous.
What were some of the features about that bill that made it something that really doesn't serve the public good?
Well, I'm not sure about the public good so much, but it really changed the system of doing things.
Uh-huh.
Like in the beginning, general excise tax, which we all know and love, was a tax on the business, and it was paid by the business. And if the business was so financially beleaguered that they couldn't pay, well, that was the end of it. Act 155, among other things, added personal liability. So if you ran a business but you didn't pay the tax, then the department could go after individual owners or other responsible people within the business and go take their houses, or take their bank accounts, or take personal assets they had. Maybe it added to the sense of responsibility for being a business owner.
Sure.
But it was very draconian, and it was a very, very different step from what had gone previously.
Now, from a very technical point of view, if one is simply saying our orders are to increase revenues, one of the means to do this is to enact these kinds of measures, so that there's so much more force in the payment of taxes. However, there's a set of principles that you go by at Tax Foundation that help to evaluate whether or not these things are good for business and good for the public. You want to mention those principles, beginning with transparency?
Yeah, we look for transparency, accountability, in the process, fairness, no retroactivity. People have to be able to plan business transactions and then follow the rules. We don't want people changing the rules in midstream.
Well, this is a really tough one, especially when we talk about fairness. We talk about equitability in the way laws are administered and so forth. And a lot of times, if the motive for the raising of the revenue is primarily financial, we may not take into account the rights of the individuals involved or the impact it may have upon the business climate.
Yeah, so that's kind of where the counterpoint is needed sometimes, because like if you have the tax department being tasked to push this legislation, they'll do it. And they'll say, okay, we need the revenue enhancement, we need this, we need that. And who's really looking out for the businesses? Who's really looking out for the individuals who are going to be affected? This is one of the things that we do. It may or may not come up on the agenda for other organizations like Chamber of Commerce or other trade groups or industry groups, unless it's kind of narrowly specific toward their industry. But something like very broad ranging like the GET Protection Act, it really affected everybody.
Well, that's very interesting. In fact, when we come back from a short break, let's pick up and give our viewers an example of tax analysis and talk a little bit more about the general excise tax, which is something here in Hawaii that probably is far more complicated than it seems. It's not just a maybe 4.3% tax that you pay when you buy your soda at the 7-Eleven. It has a life of its own that goes on beyond that. I have the privilege today of talking with Tom Yamachika, the Interim Executive Director of the Tax Foundation of Hawaii, a tremendous organization that serves as a counterpoint, if you will, to some of the things that government provides in terms of tax analysis, a very important organization. I'm Keli Akina with the Grassroots Institute. We'll be right back on Think Tech Hawaii, e hana kako, after this brief message.
Castle and Cooke, Hawaii. Investing in Hawaii, creating communities, and providing for the needs of our state. Collateral Analytics, empowering the real estate industry to make better informed property investment decisions. The Foreign Trade Zone, bringing the benefits of the Foreign Trade Zone programs to Hawaii businesses and entrepreneurs. GALEN Ho, a senior executive of BAE Systems, a global defense, security, and aerospace company. Hawaiian Electric Company, and its affiliates Maui Electric and Hawaii Electric Light Company on Hawaii Island. The Hawaii Energy Policy Forum, incorporating diverse perspectives to design a flexible and forward-looking energy strategy. Hawaii Energy, the state's energy and efficiency program created to help Hawaii's residents and businesses adopt a clean energy lifestyle. Hawaii Gas, helping Hawaii achieve its transition to clean energy and a better energy future. Hawaii Pacific Health, bringing technology and teamwork together to transform healthcare in Hawaii. The High Tech Development Corporation, attached to DBED, is the state's leading technology agency. The Scheidler Family Foundation, supporting educational, cultural, and charitable organizations, including Think Tech.
Welcome back to E hana kako. We're a weekly program on the Think Tech Hawaii Broadcast Network. And I want to say mahalo to Jay Fidel and the entire team at Think Tech Hawaii. You're doing a great job of providing wonderful content from Hawaii that involves Hawaii and the world and goes around the world. Today we're talking about the Tax Foundation of Hawaii, a very important organization because so much of what makes government run and how we provide funding to our government is in the form of taxes. It affects every single one of us. The old saying, the only certain things in life are death and taxes. And a lot of us really are not turned on, so to speak, excited about the concept of taxes. It may not be jazzy in many ways, but the Tax Foundation of Hawaii, I think, has brought it a level of jazziness, I think. and today we've got their interim executive director to continue on this wonderful show in which we're talking about taxes in Hawaii. Well, the saying, I'm sure you hear it all the time, born free and taxed to death.
That's right.
So, do you get your share of humor involved with taxes? And you're also a lawyer as well. And so you've got lawyer humor also.
Well, yeah, we have our moments of levity in our office. There's just three of us, but
I can imagine moments
it's
of
a lot of
levity
fun.
about tax.
It's a lot of fun.
Taxes are on one hand a means by which to enhance revenue for the government. But they have a life that goes beyond that, wouldn't you say? For example, you and I were chatting a bit about the impact of the general excise tax.
Well, it's true that taxes are pretty much how government gets funded. And I like to think of it as, we have services that we are all getting from our government, from things like, police, fire, protection, safe homes, a stable system to ensure property ownership, that kind of thing, marketplace regulation. All that comes at a price, and it's only fair that we contribute to it, and that's kind of how the tax system is supposed to be. There's a common cost, and we all need to make contributions, and that's how it's done. We were talking a little bit about the different ways that happens in this state. One is the general excise tax,
Yes.
which in our state is the ubiquitous either 4.166 or 4.712 you find on your store receipts. But it's very, very interesting. It's quite different from how they have it in comparable places on the mainland. And you were mentioning during the break that is it a regressive thing, and isn't that bad? And I said, well, no, not necessarily, because we have a tax system that is so broad.
Uh-huh.
It's much broader than any other state's sales tax. Most states have sales taxes that reach tangible personal property, but don't go into things like services, interest, royalties, that kind of thing. GE tax picks up all of that, and in that manner, it's a lot fairer, I think.
It's interesting.
Among all the people that are affected by it, among all the ways to make income that people can figure out. GET does produce a great measure of equality, and with a rate of 4 or 4.5%, it produces basically half of the general fund revenue, which in this state is in the billions of dollars, and no other state can come close to that kind of percentage with the sales tax system.
Other states, as you mentioned, do their GE tax differently. For example, 32 states have decided that they don't want to tax food because the lower class, the middle class, the working class are the ones who are impacted the most because a bigger portion of their budget comes from food, and so they get taxed most through a grocery store GE tax. So I'm intrigued by the statement you made before that in some ways the GE tax actually structured the way we do it in Hawaii results in fairness. How would you respond to the claim that the people who actually are hurt the most are the ones with a lower disposable income, and as a result a higher percentage of their disposable income goes to the GE tax? Because that's really where, they're not capable of tax strategies and so forth that are afforded by higher brackets to avoid the tax penalty payments.
Well, that's true, but you need to understand that the GE tax doesn't work in a vacuum. Mm-hmm. We have all kinds of other tax that the state imposes,
ranging from property taxes to not the state level, but
but income tax primarily,
taxes,
and income tax addresses more of the progressivity issue.
All right. Yes.
So the income tax is designed so that if you make more money, and you're keeping more of it, then you get then you pay more. And our tax, unfortunately, is the highest in the country in terms of the nominal rate. Either the highest or second highest. California may have beat us by now, but
I think in 2012, according to the National Tax Foundation, it was ranked the second highest. We have 12 tax brackets for income tax, with the highest rate at 11%, making us number 2 in the nation.
yeah. But the interesting thing is that for income tax, you take somebody at the federal poverty level. They're already taxed in the 4th bracket. Not the lowest, not the second lowest, but the 4th one.
The 4th.
And that, I think, is a very telling indication that our bracket system really needs to be redesigned. Are we taking the poor and taxing them deeper into poverty?
Well, and that's the point that I wanted to ask you to clarify a little bit, because I'm intrigued by what you said, that our GE tax actually contributes to equity. Are you saying that because you're bringing into the picture the other taxes that come into play for those who are not in the poorest categories?
Yes. As a total picture, you can take a look at the income tax that adds progressivity. Okay. You also need to take a look at the fact that GE tax, by reaching the number of things that it does, gets paid a significant amount by our tourist base. So a lot of it is exported and isn't even paid by residents.
Now, do you think that the state is collecting enough taxes? I mean, well, one of the figures that we have is that in 2012 we collected per capita, or on average, $1,127 per person, making us the 10th highest ranking state in terms of taxes that are collected per person. Now, one way to look at it is to see whether the state has enough money. I mean, of course, and the answer then for those who believe in taxation, as the answer is we're not taxing enough. Another way to look at it, of course, is from the point of view of equity and fairness for the taxed population, which is part of what you do at Tax Foundation. So what do you think? Are our taxes too high in Hawaii?
There's certainly an argument that can be made for that. But then you got to realize that a lot of things in Hawaii cost more. So when you ask a government worker to do something, or when you ask a government agency to buy something, it's going to cost more. So it's not surprising that the amount of tax you need to collect to do the same thing in the state of Hawaii is probably going to be more than what you would need to collect to do the same thing in say, Kansas or Missouri or Nebraska or even Ohio.
So if you start from the premise that things cost more, including services provided by government being amongst those things that cost more in Hawaii, one might conclude, well, then we need to tax more in order to have a government that can afford the services that we want.
Yeah, and again, we need to kind of go back to, here are the services that government's providing. We need to pay for them.
Well, that's an interesting position, because some would say that might be a party line, tax and spend. I mean, in the typical cliche of reducing political positions to that.
Well, no, I think it's not dependent on that at all. If you're with one political party, maybe you want to err on the side of more spending. If you're on the other, you want to be able to reduce the size of government. But in either event, you're going to have a cost associated with government, and people have to bear it somehow.
Now, at Tax Foundation, do you look at models of what may happen, for example, if we reduced certain kind of taxes? You and I were talking about GE tax, and in some of those states where the GE tax has now been lifted from food, one of the arguments used was that, well, by not taxing the consumer, the money stays in the system and then is part of the income that is affected by the multiplier principle, and in the long run the government is actually able to receive a higher amount of taxes because that money isn't immediately taken out at the point of this point of sale, so to speak. Any thoughts about that? That perhaps by actually reducing taxes, we might increase in the long run government receipts because we're allowing more money in the economy. I know this is more of a flow of money, free market argument. Wonder if you thought about that, or if that factors into the analysis.
One of the things that I had mentioned earlier is that a large portion of the GET base is exported, and so we're getting a lot of free money right now because because our tourists come, they spend, and that goes into the system. So you and I, being residents, don't have to put that money into the system because the tourists already have done it for us. Okay, that's one of the features that keeps the tax low for everybody.
Sure.
And in that respect, having it broad is a good thing because you distribute the burden among more people or things, and it's lower per thing that you distribute it to.
Well, thanks for that insight. And when we come back, I want to ask you about some other taxes other than the GE tax. In fact, some taxes that our tourist industry or our tourists themselves pay, hotel room tax and so forth. We're talking with Tom Yamachika, who is the Interim Executive Director of Tax Foundation of Hawaii. Our program appears weekly, a Hana Kako, on the Think Tech Hawaii Broadcast Network. Please be right back after this short message.
Aloha, I'm Nicole Horry for Think Tech. For nearly half a century, the Hawaii Foreign Trade Zone No. 9 has brought the benefits of the Foreign Trade Zone program to Hawaii businesses and entrepreneurs. DBET, the Department of Business, Economic Development and Tourism, operates Hawaii's Foreign Trade Zone program to encourage international business and economic development. The Foreign Trade Zone's mission is to increase the amount of international trading activity in Hawaii, thereby providing employment opportunities for the residents of our island state. For more information, see ftz9.org. I'm Nicole Horry. Mahalo.
Welcome back to Ehana Kako. We're here every week on the Think Tech Hawaii Broadcast Network. I hope you'll visit our website. I'm Keli Akina at the Grassroot Institute, and you can see our website at www.grassrootinstitute, that's singular, grassrootinstitute.org. And our programs are posted weekly. In addition, why don't you visit the Think Tech Hawaii website, thinktechhawaii.com. We're talking today with Tom Yamachika. The topic is the Tax Foundation of Hawaii. He's its Interim Executive Director, and we'll dive right back in. Tom, we were talking about the GE tax, and you pointed out that any one tax doesn't give us the full picture of equity. There are multiple taxes, and it's really the balance of all of these taxes upon different tax brackets, people in different tax brackets, that allows us to determine whether a system is equitable. Well, let's talk a little bit about corporate taxes. Do you take a look at that at the Tax Foundation?
Oh, yes.
Yeah, and what is how, in your opinion, the corporate tax environment here in Hawaii, and how does that affect business?
The corporate tax we have here has a maximum rate of 6.4%, which is kind of middle of the road among the states. I mean, we don't have the situation that we do with individuals, where we have these super high tax brackets that we can get famous for, and we don't want to be. So we're kind of a more middle of the road environment for corporate tax, I think.
And yet, at the same time, there's often some concern about how viable the economic environment, particularly with regard to taxes and fiscal policy, is for businesses. I know we're watching a bunch of commercials that come on TV that say, come to New York State and pay no corporate taxes for 10 years and so forth. And our state is always looking at potential tax credits, such as for solar energy or for the film industry, or we recently went through a period in which we attempted to execute Act 222, the Technology Act. How do you think we're doing in terms of creating a climate that produces business interest and investment here with our tax policies?
Well, I know we're certainly getting some attention. We have had with the movie production credit. It applies to both movies and TV, but we have had a lot of interest, I think, from the people in Hollywood. I practiced in that area for a while before becoming, taking my present job, and I did work with a number of film/TV production studios, and Hawaii was on their radar. Certainly, there are reasons why they would want to come to Hawaii. We have a good inventory of scenery and things that they would like. But that wasn't all. There were other destinations that offered the same thing. Puerto Rico comes to mind, and a number of the bigger studios do have people whose sole job it is to keep tabs on the credits and incentives being offered to productions all around the country and around the world. So I think we're doing okay.
Well, we certainly want to make Hawaii as attractive a destination for business as we possibly can. And getting that investment from outside is so important, particularly for industries like film. How do you think we're doing in terms of the tax situation for local businesses here, for small businesses in particular, in the range of taxes that they need to deal with, from employment insurance to and so forth?
Yeah, well, what I had heard is that most of the trouble that local small business is having stems more from the regulatory environment than the tax system. Our tax system actually isn't that bad compared to a number of other states. Let's take the sales tax system, for example. In some states, you would need to deal with state sales taxes, county sales taxes, education district taxes, mosquito abatement district taxes, port authority taxes, a number of different things. So you would really need a GPS database to know what tax applied. And of course, if you got it wrong, each of these little tiny taxing jurisdictions can come up and bite you and impose penalties and that kind of thing. We have a little of that, but not so much. We have the state and we have the counties, and that's pretty much it. And I'd like it to stay that way.
Well, it certainly makes it simpler. How do you think we're doing in that balance between finances for county and for state in terms of who gets taxed and what burdens they carry?
The balance between state and county has always been delicate. It's the lines between them are getting tougher to follow, because, well, in the beginning the counties pretty much had nothing. Then they got exclusive control of the property tax in the 1978 Constitutional Convention. Then they got a share of the transient accommodation tax, which is what we impose on visitor accommodations. So they now have a number of arrows in their quiver, and it's kind of tough to figure out what they're getting from what source. I mean, yes, they have the property tax, but they're also getting appropriated monies, I think, and a share of the transient accommodations tax. It's tough to follow because the transient accommodations tax keeps changing. It used to be a certain percentage, and then I think we got into a fiscal crisis, and the state needing the money capped the amount that the counties got. Now the counties are kind of coming back in full retaliatory mode and saying, okay, we want a percentage back, and not only that, but we also have the authority to impose a 5%, not a 5%, a 0.5%, 0.5% surcharge on the GET, just like the county of Honolulu now does for rail.
Sure. Do you think that there is a trend here toward perhaps a greater power going to the most local level, going to the county level, as counties emerge with greater authority to determine their own pathway by taking taxing authority? What are your thoughts about that? Do you think we're seeing a trend toward that direction in terms of perhaps a shift from an extremely centralized state governance to a stronger county level governance? And I have a couple examples in a moment I'll ask you about.
Well, again, it's kind of more of a policy decision about what the people want, but frankly, when you look at the tax system, you need to remember that with the kind of tax system that has the independent taxing authority for mosquito districts and education districts and this and that and the other thing, it gets tough. It gets tough for people to comply. It gets tough means it gets expensive.
Sure.
And a lot more of the money that otherwise should be going into government is getting spent on transaction costs, like, you got to pay the accountant to figure it out, or you got to pay the attorney to figure it out, or you got to pay the attorney to fight with the taxing authority when you don't agree.
Do you think that it would simplify it, though? You mentioned mosquito districts, education districts, but do you think it would simplify it, though, keeping the taxing authority along the geographic lines? For example, Maui County being 3 islands, as opposed to simply taxing for various purposes?
Personally, I'd much rather see it all at the state level.
Well, we'll come back right after this message for our final segment. Thanks, Tom. We're talking with Tom Yamachika, who happens to be the Interim Executive Director of Tax Foundation of Hawaii, a voice independent of the government that speaks to legislation and to policy by giving solid analysis from a set of principles, which we'll discuss when we come right back after this. I'm Keli Akina with the Grassroots Institute. You're watching Think Tech Hawaii Broadcast Network.
I'm Hong Jiang, host for Asia in Review on Tuesdays.
And I'm David Day, host for Asian Review on Thursdays. Both of us broadcast our respective shows at 4 p.m.
And my topics tend to deal with questions related to environment, culture, history, and sometimes human rights.
And my shows tend to be on international business, foreign policy, geopolitics, and national security. And you can watch our shows live on the Think Tech website at thinktechhawaii.com.
And you can also watch us on YouTube or Olalo.
So come join us on Thursdays at 4 p.m. I'm David Day.
And on Tuesdays at 4 p.m., I'm Hong Jiang.
Aloha.
Aloha.
Aloha and welcome back to E Hana Kako. We're here every week, and E Hana Kako means let's work together. At the Grassroots Institute, we believe that people should be united to work for a better government, better economy, and better society. One group that is deeply committed to that is the Tax Foundation of Hawaii. And that's why I'm so glad that today we have Tom Yamachika with us, who's carrying the baton. Lo Kalapa did a tremendous job with Tax Foundation, and Tom, a member of the board of directors, has stepped into the seat of interim executive director. Again, thank you for taking that role. It's an important role in the state. You know, one of the things Lowell was known for was standing in opposition to some of the tax credits, the many, some would say, that were proliferating in the state, Act 221 and so forth. From the perspective of policy, these are generally incentives. They're incentives to make investment in our state attractive, to allow the incubation of younger industries and so forth. What are your thoughts now as Tax Foundation goes forward in terms of some of the tax incentives, particularly with the solar industry?
Okay, well, there are, I think, a place for incentives. We have in Hawaii a commission that's formed every 10 years or so to look at the structure and policy considerations behind the tax system. called the Tax Review Commission. In the 2001 to 2003 report, the Tax Review Commission came out with some criteria that you'd want to look at when you do new incentives. For example, you want the incentive to be temporary. You want to incentivize the business, but then wean them off of it gradually, so that they don't wind up inefficient and unable to stand on their own 2 feet if the subsidy goes away. You need to have information reporting by the beneficiaries, businesses or whoever, so both the legislature and the public can measure how well or how poorly these programs are working. And especially when it comes to tax credits, there are some things that you really have to watch out for. And you mentioned Act 221, so I'll kind of go into this. You have to have tightly drawn criteria. If you don't, you find that everybody and their grandmother, not necessarily the people that you intended, will come in and say, well, geez, I met the criteria, and therefore you need to pay me money.
And I've got a camcorder.
That's right. Now, you need to remember that the tax department audits roughly 1% of the returns that it gets, maybe less. So if you have funky or loose criteria, you're going to have beneficiaries of the credit that you didn't intend. So if you tighten it up, if you make the benefits temporary, if you ratchet the benefits down over time, then maybe you can help an industry and you can help them become better, more efficient, and competitive in a world environment.
Tom, it would seem to me that a lot of expertise would be needed to know how the impact of a tax credit plays out in terms of the values of equity and incentivizing and so forth. It doesn't seem to be a very easy, quick to analyze picture. Is that why we need the tax foundation?
Well, no. That's why you need to have some information reporting by the beneficiaries. In Act 221, for example, the businesses that originally claimed the credit didn't have to report anything. And it wasn't until later, I think it was 2004, that the government began requiring these industries to report, okay, well, how many jobs did you create? What kind of products did you get? What was your dollar volume? What did you make? And they started to digest information like that in the reports. Then started becoming public, and at least at that point, you kind of knew how much you were paying, and you knew how much, and you knew what you got for what you paid.
So there's a gap sometimes between the concept, the intention of the law, and its execution, and in the details are really in that execution.
Yeah, the devil's in the details.
And as a result, we can end up actually killing the impact of a very good law by executing it in a very inefficient way.
Yeah, I specifically with regard to Act 221, I had a meeting with one very key legislator in the House of Representatives, and his comment was, oh, they took us to the cleaners. Okay, now if you have somebody who's that influential making that kind of comment about a tax incentive program, well, how willing is he or she going to be to entertain a future tax credit program if he's got in his mind, we got to take him to the cleaners?
So fundamentally, what would have made the experience with Act 221 more successful in terms of policy? What could we have done to have administered that better?
One of the things that I think could have been done better was You could have tightened up criteria. You could have had pre-approval, like we do at the film with the film credit now. You need to go to DBED and have a proposal. You have to have it pre-approved. Once you have it pre-approved, then you can go shoot. Right, and then we have then going into the project that we have committed to pay for, we have a pretty good idea of what it is we're paying for and how much we're going to pay for it.
You know, Tom, quite a bit of dialogue is needed, I think, to allow policymakers to make the very best decision. And often in the political climate in which we live, there's not space for that kind of dialogue. Very often the lines are drawn one side or another. So I just want to express to you my appreciation of what I get a better sense of that Tax Foundation is doing through the issues that you're raising. On one hand, we at the Grassroots Institute are very concerned about global policy issues. When I say global, I mean the bigger picture. How does this affect issues such as the size of government or the role of government, the autonomy of the individual, and so forth? Or how does this impact the poor or other people? What I hear you expressing from Tax Foundation is very authoritative knowledge about the specific nature of a tax policy, its impact within the system of other tax policies and so forth. And I think that if we have an interchange with each other, we can help policymakers even better. And are you in Tax Foundation opening up dialogue with policymakers?
Yeah, our mission first and foremost is to be educational. Mm-hmm. To raise these concerns so there can be better dialogue and better understanding of the underlying issues when the policymakers up there have to make the tough decisions.
Well, that's important. And before we go, would you just let our viewers know a little bit about how you're funded and how they could get involved with the Tax Foundation, what some of the needs of the organization are?
Well, like anything else, we need money.
And you can't tax people for it.
And we have no taxing authority, and we've never accepted a dime from government, and we don't intend to do that. We do have members from all walks of life, and you know, you've seen the member list on our website, so you can attest to that.
Well, I have a suggestion for you. Just as the Heart Association has the heart ball, why don't you have the tax ball?
Well, we do have a lunch at the end of the legislative session.
There you go.
And we usually have a very authoritative business speaker. But yeah, the black tie ball was something we could never get off the ground.
How can people reach the Tax Foundation of Hawaii?
Well, our office number is 536-4587, area code 808. Mm-hmm. And we're there.
And your website?
TF, that's TNF for Tax Foundation, Hawaii.org.
Well, Tom, I want to thank you very much for being on the show today. But more than that, thank you for taking the helm now in the passing away of Lowell Kalapa, and I wish you and Tax Foundation the best.
Thank you so very much, and thanks for having me.
Thank you. We've had Tom Yamachika, Interim Executive Director of the Tax Foundation of Hawaii, on our program, and I hope you'll take the opportunity to commend it to others as a one-stop shop on what Tax Foundation is all about. You can find more information about the Tax Foundation at their website, and you can see this program at thinktechhawaii.com. I'm Keli Akina with the Grassroots Institute of Hawaii. Until next time, aloha.